today is about conceptual framework and theoretical structure of financial accounting and reporting for three. So for financial statements, which is the most very important part, combined by income statement, balance sheet, and statement of cash flow, which the decision maker always check it either monthly, quarterly, semi-annually, or annually for their basis to decide on the operation or the entire operation if either it continue or stop, or maybe there is some adjustment in the other expenses that they have. For financial statement reports that summarize important financial accounting information about your business for the operation, entire operation, what is happening for the financial position, about the assets or resources that you have, or the liabilities or accountabilities that you have, and also the cash flow, which is the inflow and outflow of the money. It portrays the financial effect of transactions and other events, and grouping them into broad classes are termed the elements of financial statements. Three main types of financial statements, as I mentioned a while ago, is a balance sheet. Balance sheet gives a snapshot of your financial at a particular moment, incorporating every journal entry since your company launch. It shows that your business owns assets, what it owes, liabilities, and what money is left over for the owners or owner's equity. The three main parts of financial statements. The first is the balance sheet, or either way, for now, we are called balance sheet, the financial position of the financial position. Since I've discussed already what will be the resources, which is the assets, accountabilities, your liabilities, and your owner's equity, which is the capitalization that you start up with your business operation. Next is the income statement as part of the three main types of financial statement, which summarizes incomes and expenses for a period of time. In business, income is the value of whatever sold. Expenses are the cost of earning that income, and difference is profit. So this is also the financial operation. And the last three main types of financial statement or the cash flow statement, which shows how much cash came in and where it came from, and how much cash went out and where it went over a period of time. This differs from the income statement because it may include cash flows that are not from income and expenses. For the objectives of financial statement is to provide information about the financial position, performance, and cash flows of an enterprise that is useful to a wide range of users in making economic decisions. So as I already discussed a while ago from the start, that this is important for the decision makers. For those decision makers, who is the users are owners, the business managers, those board of directors, or those stockholders. It also shows the results of stewardship of management, or the accountability of management for the resources entrusted to it. For the users and their needs, first is the investors. Investors needs information to help them determine whether they should buy, hold, or sell, while employees are interested in information about the stability and profitability of their employers. So, of course, because if there is stability and profitability of the employers, they are secured, the employees are secured for their employers, that they have still their salaries and wages, and also like now, as I said, it's pandemic. So, kumbaga, sa ngayon, yung pinaka-importante na bagay sa atin lahat, if ever, sa parents nyo, isang trabaho talaga. So, if your company is stable, though I know some of the companies are also affected with this pandemic, but then I know that there are companies also that affected, but still not too much, but the stability is there. They don't have kumbaga wala silang recession for their employees. So at least tuloy-tuloy pa rin. There are some siguro na may mga changes na instead of bonuses, i-convert na lang sa iba. But at the same time, the most important thing is you have still your job. They have still their jobs. So users and their needs, also lenders are interested in information which enables them to determine whether their loans and the interest attaching to them will be paid when due. Suppliers and creditors are interested in information which enables them to determine whether amounts owing to them will be paid when due. Also, users and their needs, customers have an interest in information about the continuance of an enterprise, especially when they have a long-term involvement with or are independent on the enterprise. Government and their agencies are interested in the allocation of resources and therefore the activities of enterprises. Also, public enterprise affects members of the public in a variety of ways. Financial statements may assist the public by providing information about the trends and recent developments in the prosperity of the enterprise and the range of its activities. And elements of financial statement, the elements directly related to the measurement of financial position in the balance sheet are assets, liabilities, and equity. The elements directly related to the measurement of performance in the statement of profit and loss are income and expenses. The cash flow statement usually reflects elements of statement of profit and loss and changes in balance sheet elements accordingly. So for elements of financial statement, since under the balance sheet or financial position first is the assets, which is the future economic benefit embodied in an asset is the potential to contribute directly or indirectly to the flow of cash and cash equivalents to the enterprise. It may also take the form of convertibility into cash or cash equivalents or a capability to reduce cash outflow, such as when an alternative manufacturing process lowers the cost of production. While liabilities is an essential characteristics of a liability is that the entity has a present obligation or an obligation is a duty or responsibility to act or perform in a certain way. So obligations may be legally enforceable as a consequence of a binding contract or statutory requirement. So here, class, in the asset, kumbaga it is the resources of the entire business operation. What do you invest or in the investment here, the cash, the inventories, the stocks, accounts receivables, yung lahat na nasa'yo, na napaloob sa yung mga property, machineries and equipment na kakailanganin mo at kailangan mo talaga in your business operation. While liabilities is an obligation, which is the accountability. Kumbaga bayarin ito ang liabilities. While equity is a residual, it may be classified in the balance sheet. Equity may pertain to any of the following depending on the form of business organization. It is the capitalization or the start of capital of your business operation. And elements of financial statement, equity in a sole proprietorship, there is only one owner's equity account because there is only one owner. So ikaw lang talaga ang nagmamay-ari ng negosyo. In a partnership naman, an owner's equity account exists for each partner. While in a corporation, an owner's equity, so in partnership, either two or more. So while in a corporation, an owner's equity or shareholders or stockholders' equity consists of share capital or capital stocks, retained earnings, and reserves representing appropriations of retained earnings, among others. So for the performance naman, profit is frequently used as a measure of performance or as the basis for other measures such as return on investment or earnings per share. So ito naman is, syempre nagnegosyo ka, kumbaga may cost of goods sold na siya, 'di ba, sa income statement natin. kung ano yung capitalization mo, kung ano yung unit price talaga nun, we have to add up or mark it up for the profit or in order to return of your investment, kung ano yung ginasta mo or ano yung binili mo na materials. So dapat mabalik yon, then may tubo ka pa. So the elements directly related to the measurement of profit are income and expenses. So for performance or for in the entire operations, performance income is increase in economic benefits during the accounting period in the form of inflows or enhancement of assets or decreases of liabilities that results in increases in equity or other than those relating to contributions from equity participants. Gains represents increases in economic benefits and as such are no different in nature from revenue. For the performance expenses, ito yung mga sa income, ito yung pumapasok. Like example, yung sales mo, also the rent income, ano pa yung mga additional na cost na pumapasok sa entire business operations. So hanggang sa may tubo ka doon or kumbaga tubo ka, and then later on less the expenses, yung lahat ng ginasta mo, so meron ka pa ring natira. So performance or expenses under performance are decreased in economic benefits during the accounting period in the form of outflows or depletion of assets or incurrences of liabilities that results in decreases in equity other than those relating to distribution to equity participants. Losses include, for example, those resulting from disasters such as fire and flood, as well as those arising on the disposal of fixed assets. The definition of expenses also include unrealized losses. Recognition of the elements of financial statement. An item that meets the definition of an element should be recognized if it is probable that any future economic benefit associated with the item will flow to or from the entity, and the item has a cost or a value that can be measured with reliability. The recognition of the elements financial statement are the probability of future economic benefit, reliability of measurement, recognition of assets, recognition of liabilities, recognition of income, and recognition of expenses. For the measurement of the elements of financial statement is the process of determining the monetary amounts at which the elements of the financial statement are to be recognized and carried in the balance sheet and income statements. For measurement, historical costs, which is assets are recorded at the amount of cash or cash equivalent paid, or the fair value of the consideration given to acquire them at the time of their acquisition. For the current costs, assets are carried at the amount of cash or cash equivalents that would have to be paid if the same or an equivalent asset was acquired currently. For the measurement, realizable value or assets are carried at the amount of cash or cash equivalent that could currently be obtained by selling the asset in an orderly disposal. While present value assets are carried at the present discounted value of the future net cash inflows that the item is expected to generate in the normal course of business. While concept of capital maintenance, financial capital maintenance, under this concept, a profit is earned only if the financial or money amount of the net assets at the end of the period exceeds the financial or the money amount of net assets at the beginning of the period after excluding any distribution to and contributions from owners during the period. For the concept of capital maintenance, physical capital maintenance under this concept is a profit is earned only if the physical productive capacity or operating capability of the entity or the resources of funds needed to achieve that capacity at the end of the period exceeds the physical productive capacity at the beginning of the period after excluding any distributions to and contribution from owners during the period. So that ends our class discussion for today.